Hello again. My name is Fred Peplow and this is Cash More is Better. And the purpose of doing Cash More is Better is simply to help companies and any organization manage their cash better and stop the little leaks of cash that accumulate over time in an organization. So we've been talking about the 5 laws of cash, and we're up to law number 4 to discuss today. So quick review. Law number 1, cash is neutral, doesn't care where it came from, doesn't care where it's going. You have complete control. Number 2, when you spend $1 of cash on something that you're going to resell, inventory, it's a good thing. Buy something for $1, sell it for $2, you've multiplied the value of that original $1. Very good thing. Law of cash number 3, when you spend $1 of cash on overhead, things that expire, rent, property tax, electricity, those types of things, does not add value to your inventory. So you need to be very careful. Expense those in the period that they're incurred and on your operating statement, and don't feel you added value to inventory because generally accepted accounting principle says you have to do that. Well, you do have to do that for the bank statement. Remember, 3 statements. One for the bank, one for the tax guy, and one for you to make good decisions on. So your operating statement, you expense period cost in the period that they're incurred. So law of cash number 4 has to do with what I call lazy cash. Been in business long enough, you've got a little bit of lazy cash laying around. You need to kick it in the butt and get it out of the organization, get that cash moving again. Lazy cash, things like old accounts receivable, equipment that you don't use anymore, obsolete inventory, and even cash in accounts that don't earn interest and you had for a reason at one time and that reason no longer exists, but you never closed the account. So obsolete inventory, you know, if you've got something on the books for $30 and you can get rid of it for $20, your cost account might say, oh no, we're going to lose $10. Well, you know what? You've already lost that $10. Unless you sell wine, that inventory rarely increases over time. So get rid of it, sell it to somebody who won't be buying your current high value normal inventory if you can, but convert it to cash and use that cash for something valuable. Things get damaged, get more and more obsolete when they sit on your shelves, take up space, you count them and recount them and recount them. It's just silliness to keep those things on your books. Accounts receivable, collect, 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 collect. Work on them, give them to an agency at some point, and move on. But get what you can, get it early, because the longer you wait, the harder those old receivables are to collect. Equipment you don't use, oh my gosh. So many times I see somebody say, well, we'll buy this new machine and we'll justify it because part of the justification is that we're going to get 10 grand for the old one. After we bring in the new one, get it all set up, then we'll sell the old machine for $10,000. Great idea, all for it, except you never do it. You put that old machine in the boneyard of your plant someplace because you just might need it someday, or you might need a part off of it for that other machine. So you've justified the purchase of the new machine partly based on getting that money back, and then you don't do it. And almost never is that a good decision because you rarely need the capacity from the old machine, and you rarely need a part that's of value anywhere near the cost of storage, maintenance, and so on the old machine. So get rid of it. And cash, it's just silly to keep lazy cash around. Lazy cash means you're the lazy one, not the cash, because you haven't dealt with the fact you don't need that account anymore. So, lazy cash. Look around. You've probably got some old equipment, old receivables, old inventory, or a checking account or 2 that you don't need anymore. Get rid of them. Put that money to better use. It's the 4th law of cash. Come back again for law number 5 because it's the best one of all. See you soon.